probably one of the biggest mistakes I see folks making out there is that every post they have is just they're here to sell something, or hey, buy my course or buy my book, or let's get on a call.
If you're building a relationship with somebody for the right reasons, then you're doing it for longevity, not just for whatever's directly in front of you right now.
What's your mindset going into these relationships?
You know, a lot of folks tell me Q4 is the worst time to raise capital. Holiday season, people are traveling, Christmas, Thanksgiving. A lot of it starts with mindset. I actually think it's the best time. And one of the things I've done is
Eric Chadderdon in the house. How you doing, my friend?
doing awesome, my man. Doing awesome. Excited to be here.
Well, I appreciate you having you, man. I'm so pumped to be talking to you about so many things. Eric, I know you're one of the founders, co-founders of Gibby's Capital Investments. Love your sign back there. It's kind of hard to miss. Gibby's Capital Investment. Eric is a master at sort of getting into relationships, whether it's investor relationships, partnerships, brokers. I mean, he's just a master, really facilitator, network, or whatever. So I'm going to be asking a lot of questions about how that works in the investor world. But I also want to, if we have time, maybe go into some other relationships. But it's more like the mindset that I want to really get into. But before we get into that, a reminder: I've got a bunch of questions for Eric because I'm selfish and I got my own things that I want to find out. But really, this is meant for you guys. Those that do not know you, you want to give a little bit of your background and how long you've been doing this and what exactly it is that you guys do.
Yeah, so excited to chat with you guys today. Hopefully we drop some good value for you. My name's Eric Chadderdon. I am one of the co-founders of Gibby's Capital Investments, as Mauricio said. We focus on multifamily syndications, and we target 100+ unit apartment complexes. We pull together a select group of capital from our investor database, and we buy these bigger and better performing assets that we couldn't otherwise buy on our own. And leveraging other people's money. That's the whole concept, and helping them to get a good return and us along the way. It's a beautiful thing. So we've been in the space for just under 4 years now, and we've done pretty well. We've come out pretty hot, and we've scaled to a little over 2,000 units, about 260 million of assets in that period of time. By no means are we perfect, but we're doing the best we can. We've come a long way, and we're getting better every single deal and every single year, and just excited to pour whatever value I can into you guys.
That's awesome, man. And what made you pick multifamily? Like, why not self-storage or mobile home parks or single family? What attracted you to multifamily?
Yeah, so I kind of got attracted to multifamily for a couple reasons. One, I grew up around it. My parents had single family homes and also 2 small multifamily buildings as well. But the issue that I saw was my parents were self-managing everything, and they also had 9-to-5s on top of that. So I just realized, I was like, there's got to be a better way. And sometimes the bigger you go, the better. And so I knew it was possible. So I always had interest in apartments. And then almost 4 years ago, I saw Tyler Devereaux's face pop up on my social media, went to one of his workshops and fell in love with multifamily from there. So
I love the fact you said there's got to be a better way. I use that phrase a lot when I'm telling my story about when I was in the law firm and just kind of grinding and doing the rat race. I'm like, there's got to be a better way. Whatever I was doing.
Yep.
Cool. Well, I really want to dig in to the whole journey, dude. So if you don't mind, has it been harder to raise lately? Is it getting tougher out there, or how are you navigating that?
You know, there's always 2 types of people, right? There's a lot of people that are, and I hear it from both sides. I hear people say it's the worst time. It's very difficult to raise capital. I've definitely seen people be a little more hesitant than before. But I also think, to touch on what you said earlier, a lot of it starts with mindset too. A lot of folks tell me that, Q4 is the worst time to raise capital. It's, holiday season, people are traveling, you got Christmas, Thanksgiving. I actually think it's the best time. And because of that, I raise most of my capital towards the end of the year, trying to help get folks into the last deals of the year before, for tax purposes. And so I think it's a lot of it mindset wise. If you go into it, excited about the opportunity, excited about whatever time you're in, then you can transfer that emotion and excitement to your investors. That said, with things going on in the market, absolutely, there's been some more, people that are hesitant, with interest rates and insurance across the board. So we're just being careful, but we're taking this time right now to educate a whole lot more than ever before.
You stole one of my questions. I was going to, obviously you're a master builder of these relationships, and I wanted to kind of find out what's your mindset going into these relationships, because I want to talk about each phrase, but overall, kind of generally, when you enter into a relationship, whether it's investors or partner, a broker, an attorney relationship, what mindset do you go into it from the get-go?
Yeah, I go into every single encounter, no matter what. And anybody that knows me, there's a lot of folks that know me on this call, but if you've ever been in touch with me or on a Zoom call or investor meeting or whatever, like I always try to approach it from a place of value. I try to always add value first. And I just believe that the more you can give, eventually it'll all come back full circle to you. And I just believe that. I do. And so I always just try to I'm always going into these situations, asking questions, prepared, because the more questions that I can ask, then the more ammo and the more I can weaponize myself to, guide the conversation the right way in what's most serving for them.
Beautiful. So as I was saying before, I want to go through specifically with investors, like there's the lead part, like how do you get people even to be aware of you and get on your list and get into your world? Then I want to then kind of transition into, how do you get to that next step, which is kind of a potential investor, a prospective investor, how you approach that. Then we're going to get into actually now you're an investor. How do we get them to be sort of a repeat investor, like kind of a raving fan? So let's start at the beginning.
Yeah.
What's your approach then, or how are you recommending folks to actually get into relationships to begin with investors? Like how are you getting investors to be aware of you, getting on your list, getting on in your universe so that you can actually start talking to them about potentially investing in your deals?
Yeah, so I think naturally for a lot of folks on here, when you're starting out building your list or whatever, you're starting with friends and family. And a lot of the time too, when you're newer, you might not have the track record and the confidence to like go talk to your friends or family and have that, that portfolio to back it up. And so I think one of the biggest things I did at the beginning, I just tried to remove the pressure from myself, and I was leaning on my partners, leaning on my partnerships, my sponsors, and that's what I did a lot of the time. So instead of really me talking about me being the expert, I was fully transparent. Like at the beginning, I would just tell investors, hey, listen, you're not going to invest in this deal because of me, but in fact, because the partnership team that I put together, in fact, so-and-so, this is my sponsor on the deal. They've got 15 years of experience, over 3,000 units, XYZ. You're going to invest in this deal because of them and their track record, not because of me. And I'm just grateful that I get to learn from someone like that. So when I first started a long time ago, that is how I was raising funds. I was really not necessarily talking about the deal or myself very much. I was talking about my team, because I believe one of the biggest factors behind deal performance is the GP team, the sponsorship team behind it, right? Because if you have a great team, you can take even a mediocre investment and turn it into a big success. But if you have the bad team, you can take a great investment and turn it south very quickly. So I would really harp on the team quite a bit.
Yeah, it's a beautiful thing to be able to leverage. It's just a great form of leverage, whether you're starting out or not. It's just a great thing to do. So those conversations you were getting into people, how did you even find those people? I mean, are you someone that prefers to go to like seminars or meetups, or like how do you actually go about getting into those conversations in the first place? So even discuss whether it's even a possibility that they invest in one of your deals.
So first and foremost, you have to put yourself around where there's people always. Like I have examples, and I teach on this topic quite a bit, but I have examples of literally talking about the business everywhere I go. Like I've raised capital in hot tubs, or I've gotten investors. I've made contacts with investors in hot tubs, airplanes, coffee shops. When I first started in the business, I went to every single local real estate meetup, every large multifamily conference across the country. I just put myself in situations, and eventually you start to be able to talk the talk a bit more comfortably, and you learn how to add value at these conferences. And I just try to be a connector, really. And so even if I'm not the right fit for them or the right person, I'll go say, hey, this person over here, like you got to meet this person. And I'm just trying to add value, but go put yourself in as many situations as you possibly can when you're new, and even when you're not new. But that's how I started. I just went to as many events as I could. Seminars, conferences, workshops, you name it, I was there.
You've done such a great job on the sort of the social media. You're kind of everywhere. You're getting a big following. How important has that been? And did you start with that right at the beginning? Is that how you started doing stuff, or is that just something that's recently? And describe a little bit of how you're using social media as a way to sort of attract potential investors.
Yeah, I would say these days, probably 70% of my investor contacts come from social media. And so if you guys are not on social media, get on social media, build a brand, start a podcast, whatever you can, because these days when people go to look at your credibility, one of the first places they look at is your social media page. And I was not, and some of you on the call might be like, I'm not a social media guy. Some of you might not even have social media, but I promise you that is where I find most of my potential investors these days and start building these relationships. Because that's where a lot of people spend their time these days. They're on their phone, they're scrolling on social media. So I try to put myself in front of them. But yeah, I wasn't always like that. If you look back on my social media page, if you scroll to like my Instagram reels and all the way down, like my first post ever, like that was like my fourth post ever was in 2020, my fourth post ever. And so social media was around a long time before that. So yeah, I didn't really get big into social media until about a year and a half ago. That's when I started really kicking it into gear. And I still feel like there's so much room for growth on it.
Yeah. And what I love about your social stuff is that you really add value to the audience. You lead with value, right? And I don't think I've ever seen it. I'm sure you do it somewhere, but I rarely see like a call to action, like, hey, buy this or book a call or whatever. It is purely like, I'm here to add value to you, and you're going to watch this 30, 60, 90, YouTube video, whatever it is. And you're going to walk away with some, piece of knowledge, but regardless of whether you do anything with me.
Yeah. And I think if for those of you that are looking to start on social media, like you'll see if you go to my page, I talk a lot about real estate for sure, but I'm not just talking about real estate. I'm talking about business, entrepreneurship, family, life, just all things. Because if you're just focusing on your real estate and that's it, then the net that you're casting is going to be far like more narrow, right? If you talk about business, entrepreneurship, leadership, mindset, all these other things, you're going to cast a far wider net. And then once you've cast that net, then people might like what you're putting out. Now they might start following along. And then at that point, now you launch a new offering. Now maybe they are interested at that point. You have a relationship built and established.
How do you actually take them that, somebody who's following you on one of the social media platforms, or maybe there's a subscriber to your YouTube or what have you? How do you transition them from that to, do you try to get their email address, or do you just DM them in the chats? Like, how do you actually start talking to them? Because they just followed you, right? Like, you've got I just started following you. How do you make the transition from you're following me to now let's get into a conversation somehow?
Yeah, so it definitely takes some active effort. You can get some help if you'd like, but usually with new followers, I like to I'll take active, like if I'm monitoring my page, which normally I am, then I will take intentional effort and go message them, say, thanks for the follow. We learned this with Dan, Dan Martell. And it's like, hey, thanks for the follow. I see you crushing it. Love to connect sometime. Looks like you're crushing it in your space. This is what I do. Let me know if there's any time to collaborate potentially. Something like that. Just boost them up, talk about their business, let them know you recognize them. But I will say this, right now I have 2 posts a day that goes out on Instagram, Facebook, YouTube, TikTok, and also now LinkedIn. And so across all the platforms. And it's at the point now where I am getting probably like 10 to 15 DMs per day from those posts. And they're just educational posts. And so like Mauricio, you're right. Like not all the time I'm not like selling anything. I'm just saying in a lot of my calls to action, and I've taken, just so you guys know, like I'm still learning a ton too, but I've taken like 6 different social media courses and jumped into different social media networks and programs, and I'm learning as much as I can all the time. But a lot of what I've seen recently, this is good knowledge for you. A lot of what I've seen recently is a lot of folks don't like it if you are selling a lot. And so like a lot of my call to actions, if you see, they say something more along the lines of, if you got value from this video, then follow me for more. So the call to action is more so like tailored around following me for more. And then they will eventually reach out if they resonate with what you're putting out. So
yeah, I think it's probably one of the biggest mistakes I see folks making out there is that every post they have is just they're here to sell something, or hey, buy my course or buy my book, or let's get on a call. And maybe it's just a patience thing, like just really having the patience to just educate and add value. I mean, I learned this from Gary Vee. I mean, I spent a lot of time with Gary, and he's got even his book is called, I think, Jab, Jab, Right Hook. It's like add value, give jabs, and every so often go in there. I mean, obviously, if you have an offering, I presume at that point, you're like, hey, I've got a webinar, come join us on a webinar. I assume that's when you really start, once you have a deal on the contract or something, is when you press the pedal, right?
Yeah, and there's some other strategies that we've recently been implementing. We call them more evergreen content, like evergreen strategies, where we've designed like this evergreen webinar, educating folks on like the concept of multifamily investing, educating them on who Gibby's Capital is, Brett Davenport, Megan Davenport, myself, who we are as a company, what our morals and values are, what we stand for. And then again, jumping into the whole concept of the business and how it can make their life easier. And so this is an evergreen webinar, pre-recorded webinar that is going out. And now we've got an ad budget for it. And so that's playing constantly. And it takes people to a opt-in page where they opt in to register for the webinar. Then they can watch it. But now once I have their information, and like it takes them, once they want to watch it, it takes them to a page. On this page, it's name, phone number, email. Are you accredited? Are you not accredited? Are you looking for investment opportunities? If so, how much are you looking to invest, with a few different options? And so this page is basically my lead magnet, right? And then so they're filling this form out, but now they're in my ecosystem. They're in my database forever. So now they're seeing my monthly communications, my monthly newsletters, and then again, they get to watch that webinar, and at the end of it, they can book a call with me. And if they're not ready, that's perfectly fine. We want them to invest. We want them to jump when it's best fitting for them and their lives and their families. So they have the webinar, but then once they're in my ecosystem, they're getting all my content on a monthly basis. And that might also spark, an investor call in the future as well.
Do you have a preferred, like, best social media platform specific for a syndicator, right? Obviously there's different platforms that, for different things, but if you're a syndicator like you are, can you rank them? Like, what's the top 2 or 3 that you would go for?
Yeah, there's different platforms are better for different things. One of the platforms I haven't tapped into nearly as much as I'd like to is YouTube. I think you're going to get a much higher quality, like investor type potential, individual from that platform. I haven't quite gotten to that point where I'm putting long form content on there, like even yourself. But I like Facebook, Instagram, and LinkedIn for different reasons. Facebook, I like for community. You can build a community. Like we built a free group, and this is not meant to push that in any way, but it's meant to let you guys know you can do the exact same thing. It's great for community, where now you can drop real estate related content to a specific group of individuals, invite them to your community, and just start building and adding value to this group. So we've done that. Instagram, I just eyeballs, like a lot of eyeballs on Instagram. I get in front of more people on Instagram, which is more potential leads. Now, not all of those people want to be potential investors. Some people do want to be potential investors. Others, they might just want to give me some props for some cool content. But regardless, those are more eyeballs that are on there and eventually could lead to potential investors. LinkedIn, a lot of professional individuals there. I get less engagement on LinkedIn, but I do get really high quality individuals and people that reach out to me on LinkedIn from those posts. So I get good engagement through messaging and things like that. And I also get, what's weird is I also get a lot of people from LinkedIn that end up emailing me. And so people email me more from LinkedIn than any other platform, just access to my information, I believe. But yeah, Facebook, Instagram, and LinkedIn are probably my top 3. When I want to tap into YouTube.
Are you doing ads? Is it costing you money, or what does a budget look like if somebody wanted to start doing this from the marketing and investor acquisition costs, I guess?
Yeah. So as far as running ads, no. Yes, you totally could, but there's different ways. Like you can tap into people on social media. Like you could go request if you really wanted to. You could go, depending on the type of high net worth individual you're looking for. Out here in Texas where I live, we look for like oil and gas professionals, medical professionals, tech professionals, business owners, CEOs. But what you can do is you can even go on Facebook with no budget, and you can go search these different groups for these types of high net worth individuals. And it's a numbers game. Not everyone's going to go let you into their group. Maybe you go request to join 10 oil and gas professional groups, and of the 10, 2 let you in. But now you have access to a whole new group of people where you can talk about the pain points of the oil and gas industry, right? The oil and gas industry is a very volatile one. There's times of the year it's very great and it's booming. Other times it's not. And so one of the hot buttons for an oil and gas professional might be stable, consistent, passive income. So that might be something for them. Medical professionals, that's another type of individual we target, is because medical professionals for sure have pain points. One, they have such demanding work schedules, right? Demanding work schedules. 2, they all have a lot of student loan debt. And so, if you think about a medical professional, for example, like when in the world are they going to find the time to go learn how to buy an apartment building? Like they're just not. And so they need people like you, they need people like me to come in and offer good quality investments, but just be the person that they can trust. So you can go search those kind of groups. You can do that for free. As far as like my budget for creating all of this stuff, it just depends. It's more so how much content you're wanting to put out. And so like I pay for my videographer, pay for my editor. And that's really what they do. That's what they do for me. So and for me, what I do is I do batch recording. So I'll either record once or twice a month for a 2 to 4 hour session, and that's it. And so you guys can, a lot of people tell me they don't have time to do it. Well, if you can carve out 4 hours a month, then you can totally create content for an entire month's period.
Yeah. And by the way, when you get in those groups, again, add value, right? Drop in there and start adding value. A lot of people and that's something that happens in my group too. People come into my group and just start spamming and like, oh, I got a deal, or I got money, or who's got this or whatever. Just go in there and add value. But yeah, talk about that though, Eric, in terms of cost, finishing up the cost discussion is, correct me if I'm wrong, but you don't have you don't use a full-time videographer. You literally hire somebody to come in once a month or twice a month for 4 hours. Whatever. Just do the math in terms of the cost, and same thing with the editor. It's not like you have a full-time editor on staff. You presumably you outsource that, and they're charging you whatever amount of videos you're doing. So it's not like a full-time professional you're looking to add to the team.
Yeah. You can have my videographer also does my editing. I also have a team overseas that does it. But he comes, like I said, once or twice a month, usually once a month. He's coming this week. And he'll record me, and I have a studio here at my house. I set up my studio. I've got multiple different backdrops for different settings. Little secret for you guys, if you want to have a variety of different backdrops for your page. But that's what I do. He records me. He takes all the footage home, edits it, gives me 5 videos within the first 48 hours so I can start posting, and then he gets the rest of them to me by the following week. And I just recently upped it to 30 videos a month. And I was before that doing 12. And so that's why I've seen an uptick, is I've been posting more consistently, which helps me in the algorithm, and a lot of engagement, a lot of shares and likes, which is really, really good. And that's what's contributing to the more eyeballs for sure. But he comes, he records me, and after that, he edits it, sends it over to me. I have an assistant that posts it on my social media, and then I get on there every single day and I engage with my people.
Dude, I can't overemphasize that part. That last part you just said, engage with people. A lot of people just push stuff out. And I found that the more eyeballs I get on my content is when I'm actually in the trenches responding. I think you should be able to respond to every single person that comments on your thing. We don't have that many. So it's like when somebody posts, respond, engage with them, get to know them. And when they start engaging with you in those comments, they're then going to see your next post, or your already posts are out there. They're going to see them. So don't treat this as just a platform to push out content. It's meant to be social. And I'm the same way. I spend like an hour every morning on LinkedIn. LinkedIn's my platform, and I'll just go in there and I'll start talking to people, right? Because then they'll see more of my content. All right, so let's move on a little bit to, okay, so you've got the eyeballs, you've been putting out great content, people know who you are, you're starting to establish your brand. When they see you, okay, cool. Now you've sort of got them, and you've got them on your email list. Maybe you even had a call with them. Talk a little bit about the nurturing process. Again, before they invest, they've just found you through your social. They're not an investor yet. What are you doing between getting them on your hamster wheel or your conveyor belt or whatever you want to call it before they invest? What are you doing in that gap?
So I have automations set up through our active campaign account. So when somebody subscribes to our newsletter, that's usually where I try to get them to first. I want them to understand who we are as a company and just make sure that we're a right fit for each other, right? It has to be a fit both ways. And so I have an automation sequence that after they sign up for our investor database, they get a sequence of 5 different emails educating them more on who we are, what we do, and then gets them to book a call with us. But even though I have that automation sequence, I always personally reach out as well. I will send them a personal email from my actual email address. So not through my active campaign, not through our website, not from Gibby's Capital, from Eric. And that goes right to them. And sometimes I'll get a kickback, like the email didn't get through, but I also have their phone number from the lead form. And so I will send them a text message as well. I'm not worried. And I always try to do it really quickly. That's like the key. I'll get notification email saying a new lead came in or a new investor joined your database, and try to send them an email immediately, usually within 2 to 5 minutes, if I can. And if I can't, then that's okay. I get to them later. But that's part of the nurturing process. Personally, for me, I'm the type of individual, I like to set the right expectations with everybody from the beginning. And I believe that raising capital is a delicate process. It needs to be done a certain way. There's a lot of people out there that are raising right now, and I want my investors to be educated on how we do things the right way. And so I always like to jump on a call with them, no matter who they are, whether they're an accredited investor, whether they're not, because I believe in everyone. Even if they're not an accredited investor yet, doesn't mean they won't be eventually. And so I like to jump on a call, introduce myself, and just be like that first point of contact for them and the first impression of what our company is.
And so then when you do have a deal, you get something under contract, what does that process look like? Now you've kind of established your list, right? And now it's time to be like, hey, it's go time. We got to try and make sure that these guys attend our webinar. I forget if you even do a webinar or not, but whatever it is, the information, the pitch deck, whatever, the webinar, what does that look like now? Is that just sort of a campaign to get them to watch the webinar or review the business plan?
Yeah. So sometimes we'll do like live webinars. We'll do that when we're in the middle of a raise. Love doing those. Those are always good, great for engagement and answering questions. But I also pre-record a webinar every single time. So I love pre-recording a webinar, and we'll send it over to you guys to make sure everything's all compliant. When I first started, I made a list of 76 people that I thought would be investors in my deals. And in my first 2 years of being in the business, no more than 3 of them invested with me. And that can be deflating, but it also helped me realize how important it is to put strategies in place to find new people constantly. And so anyway, that's what we did. And now we're at the point where we have a little over 1,100 investors in our database now, which is cool. And yeah, we've done well. But I mean, to me, that's nothing. My goal is to get it to 2,500 in the next 12 months, which is more than double.
Are these, are those investors who have actually written you a check, or are those prospective investors?
No, those are prospective investors in our database. Yeah, in our database.
Yeah.
If I had 1,100 investors that invested with me, we'd probably have more deals by now. So
I can't
up that number.
It's so important to do the personal touch too. I'll tell you a quick story. As you guys know, I do some stuff with Ken McElroy, and I was talking to his investor relations guy many years ago. It's actually no longer his investor relations guy, but he would tell me that anytime an investor even emailed him with a question, he would pick up the phone and call him, because he did not want to waste an opportunity to have a one-on-one conversation with that person. And the guy would be like, hey, you didn't need to call me. I just needed something quick, or I needed a quick answer. I needed a document or whatever. And that was his thing. He wanted to talk because he's looking to build that relationship and nurture that relationship, so that when the next deal comes in, again, they're like friends and family. They know, like, and trust him. So I thought that was an interesting, because these days there's such a push to just automate everything and put everything sort of on a automated sequence, and people underestimate the power of one-on-one contact.
100%. And also too, when you're out having these conversations with folks, if you just listen, they will tell you everything that you need to know. A lot of times I'll jump on, and one of the biggest things I hear is that somebody invested with another operator and they couldn't get a hold of them, or they couldn't get their emails answered. They couldn't, whenever they called, they never heard back, or sometimes it would take 2 weeks. And so, that's ammo that I need to now know, okay, cool. Communication is most important to this individual. Now I'm going to follow up very, very quickly, as you should, right? As you should.
How do you keep your investors happy then? Once they become investors, what does that look like then? How do you get them to become repeat customers or repeat investors?
Okay, so this is actually I think this is a really fun process. This is something I've learned and grown with over time. But one thing, I'll tell you guys this, that I did, I started doing this 2 years ago, and this is just one thing, but one is communication always. You communicate as frequently as you can, not at the minimum once a month, to let them know what's going on at the property and what's going on in the market, the real estate world. Just educate them. For me, I always I'm not just trying to get these people to invest with us. I want them to also be the very best investors for them and their families as well. So the more that I can educate them, the more they can be the best investor for them and their life. And that's what I feel like part of my job is, to make them the best investor, right? So that's one thing, communicate effectively. But two, I would tell you this, it's a very overlooked thing, but just show appreciation, sincere, genuine, authentic appreciation. And we started doing this thing 2 years ago, and it was actually pretty wild. But I sent out an investor gift. I actually might have one here. So I sent one of these things out. So this is actually to myself, because we passively invest in our deals as well sometimes. So, but anyway, it just says, Gibby's Capital presents this investor award to so-and-so. And then it also has, the current year assets under management and then a lifetime assets under management. And so the reason why I did that, I'm not sure if you can see it, but the reason why I did that was because I want these investors to feel like they're growing and building with us. Like as we continue to scale and grow, they're growing alongside with us. So then like the lifetime total each year continues to go up and up and up, which is really neat. But then what happened after this, I was not expecting. I did it purely just to show appreciation and gratitude for investors, trusting us with their hard-earned money. But what happened is I started getting photos, text messages. Investors would text me photos of the trophy saying, "Hey Eric, thanks so much. Appreciate the trophy. Oh, by the way, we've got an extra couple $100,000 we're sitting on. Let me know when your next deal is." And this happened to me. And so just from sending out these trophies, I think we spent like $7 or $8,000 on them one year. But I mean, we raised probably over 7 figures just from showing appreciation gifts and sending appreciation gifts to our investors. And just, it's almost a status thing too. Like the investor goes and puts this on their desk, and then holiday season comes along, Christmas, Thanksgiving, whatever it might be. They have family over, friends over, and you have to imagine that's got to be a point of pride for them. Someone asks them, "Hey, what's that?" It's like, "Well, I'm actually a part owner in a $52 million apartment complex with Gibby's Capital and Eric Chadderdon, Brett Davenport, Megan." And then that's going to spark some questions that might get their family or friends interested. And then not just that, then eventually, if they have other funds available, you're going to be one of the first people they think of.
That's a great thing. If you guys are interested, you probably read this too, because it was a Dan recommendation. There's a book called Never Lose a Customer, and they have a ton, I forget the name of Coleman, I think is either his first or last name, Never Lose a Customer. And it's got all kinds of fun things to do. And sending gifts like this is one of them, but there's so many different ones. You want to share one more just for fun? Because these are always fun ideas to come up with. What other kind of stuff do you do for your investors? You share gifts, anything else?
Yeah, I think like the big thing is just like random text messages. We haven't done this, but we're going to start implementing it because our new CRM that we're using can like really implement this. But sending birthday cards out to every single investor. And I haven't done this before. I got this idea from another operator, and I wish I remember who they were. I would totally shout them out right now. But that's part of like raising capital or just being the best operator that you can be. Part of that is being a student of the game. And one of the things I've done is I've surrounded myself with people way better than me. And because of that, I've picked up on different strategies that they're doing, which is, what we're trying to hopefully do for you guys here. Learn from different strategies. So birthday cards, things like that as well. Yeah.
All right. So that was pretty cool. Really, I thought that added a ton of value when it came to the investors. But how do you extend that same mindset and mentality in other relationships? Like, for example, brokers, it comes to mind, right? I mean, finding, that's also a challenge. I mean, finding money is one. The other part of it is finding deals. And I know some of the frustrations is like, well, you've got to get into relationships with brokers. They've got to be able to send you deals or advocate for you. How do you use the same mindset, or is it slightly different when you're talking to other groups? Like, let's use brokers, for example. How do you get in relationships with brokers?
Yeah, I mean, I think, and that's what Brett Davenport, my partner on the call, that's what he is the master of. But I would say it's the same mindset, the same philosophy applies. You come from a place of adding value, but also remember, guys, that like these relationships, I believe that like if you're building a relationship with somebody for the right reasons, then you're doing it for longevity, not just for whatever's directly in front of you right now. And Brett could tell you, anyone on our team could tell you, but we had a situation a couple years back where we had a broker tell us that we got the deal. He verbally told us that our LOI was accepted, and then we didn't hear from them the next day. We start getting worried. We start getting like, what the heck's going on? And turns out that broker ran into a different operator group on site with the seller that day. They took a liking to them. Can't beat face-to-face interactions these days. And they awarded them the deal after telling us verbally that we got it. And, 2 ways that could have gone. We could have been frustrated. Absolutely. Like that for sure could have been reason to be upset. But instead we took the high road and we tried to flip the script a little bit and put ourselves in the shoes of that broker. Like no way in heck were they thinking, oh, I can't wait to go talk to Gibby's Capital and tell them, hey, by the way, I know I told you got this deal, but you didn't actually, sorry. And so we had to really put ourselves in their shoes and realize, hey, this is a relationship that could be beneficial to us long-term. How we handle this will determine our relationship with this person for many, many years to come. And so we took the high road. We understood where he was coming from. And because of that, he actually brought us an off-market deal, gave us a little time to check it out. We checked it out. We ended up closing that property. That was 144 units here in Houston, Texas. It's a great performing property in our portfolio. So yeah, I think it always stems from, like, one, coming from a place of adding value, but two, remembering we want to build these relationships, not just for 1 year or one deal, but for many years and many deals to come over the years.
Give us an update from your perspective. Like, where are we in multifamily? Should people be staying away from it? Is this more room to drop, or is this a great time to get into it? What's your overall thesis these days on where we are in the market cycle?
Yeah, I believe there's opportunity wherever, as long as you know what you're doing, right? Like, you need to get educated. If you just go wing it, I think that's when people get into some risky situations. But I think there's buying opportunities across the board. Like, right now, we're definitely seeing more deals come to us, across our desk now than in the last 6 months. But I will say this, like, our company, we spent a lot of time building strong, broker relationships. And so we've had strong off-market deal flow for the last couple of years. And so there was always opportunities that were crossing our desk. Now, I will say this, like, every market's a little bit different. Our market, Houston, it's challenging right now. It's challenging. And I think part of the way you raise capital is by being transparent with investors, let them know what could potentially happen. And right now, we've had a lot of things happen in our market here in Houston. Insurance across the board, taxes, it's making it more challenging to find deals that do pencil out, for sure. And even current deals that you're currently managing, things can change, right, on a yearly basis. And so I think by planning ahead and being extremely conservative in your underwriting, I think there's opportunities out there. But again, it's a numbers game, and you have to really, really play it safe, for sure. But I think there's opportunities right now, definitely.
Are you only in the Houston market, or are you looking at other markets? That's one of the questions. Where else are you looking to invest the rest of this year or maybe next year? Or is Houston your main focus?
No, definitely. Like, we like Houston. We live here. My entire team is from here. But 10 of our 12 properties we own and are managing right now are in Texas. We've got one in Scottsdale, Arizona, one in Niles, Michigan. Believe it or not, our property up in Michigan is one of our best performing assets in our portfolio. And I didn't know anything about Michigan before I did that deal. That was one of the first deals we sponsored, and it's performing extremely well. Yeah, just grateful for that one. But also, too, we're seeing a lot of deals pop up in the Midwest right now. We're open to other markets. So we are not just tailored to Texas. Right now, we've been kind of known for Texas deals. But I will say we're open to other markets. If somebody wanted to partner with us, we love collaboration. We love partnerships. There's different value that our team brings that other teams can bring. But yeah, and someone asked if you're a sponsor. Yes, we sponsor deals. I would say this, though, as far as sponsoring and just as far as partnerships in general, like, we are definitely experts of the Texas market. So if you are presenting an opportunity to us outside of that market, I would say just come prepared, put together a strong executive summary, put together strong market research on why, because that way it'll make it easier for us to be able to decide yes or no on one of those deals or one of those opportunities.
When you first started out, did you invest your own money in the deals you were offering, or did you find other ways to show investors that about your commitment?
Great question. At the beginning, I jumped into a pretty expensive mentorship program, and so I could get coached and educated on how to do this business. So, the first few deals that I participated in, that I was a general partnership on, I didn't put any of my own money into. And I was transparent with that with investors. I didn't have money. I was trying to pay off my education. But what I will say is it helps when you have team members that do, right? When I first started, I had sponsors and other partners that were investing their own funds. And so I would just go to our investors and say, hey, our team collectively has put in X amount of dollars into the deal. And if they ever asked me if I did personally at the beginning, I would say no. But my partnership did. But also, too, you could look at it different ways. Like, some people think if you're not investing into a deal, that could be potentially a bad thing, or if you're not investing very much. I think it's all logic, right? If you go into it and if you explain to this investor, like, hey, we need to keep our funds liquid so we can continue to bring other, good opportunities to our investor base, then that's always good. I believe in putting skin in the game big time, because I also believe, like, for two reasons. One, if you invest your own funds, you need to for tax purposes. There's great opportunities there. But two, it does speak volumes to your investors when you can go to them and say, hey, my investment capital is invested right alongside yours. So we like to invest in our own deals because of that. But at the beginning, if you don't have funds, then see if your sponsor team can help you out.
You've used the word transparency quite a bit in today's episode, which is great. I don't usually hear that too often. And it's no surprise. I've been doing some content where a lot of LPs are kind of pissed these days at GPs for the lack of transparency. So will you talk a little bit about transparency and how you view that and how it's helped you?
Yes. Yeah, for sure. Like, again, coming from a place of transparency, like, there are deals that are struggling. We've got a couple of our properties that have bridge loans on them, floating rates, bridge loans out here in Houston, and they're struggling for sure. And we've learned from that. And we'll get better because of it. But on those deals where you have to pause distributions, it's not fun. And you could either go quiet and go dark on your investors, or you could go the other route and you can over communicate, which is what the route that we chose to go. And, you might think investors would get upset with you if you pause distributions, but if you do it the right way, they'll actually appreciate you and they'll understand why. So that's what I would say, is like letting people know, hey, our taxes doubled on this property. Hey, our insurance tripled on this property because of what's been going on. Also, too, we had floating rate. We got a rate cap, which protected us to a point, not all the way. But these are the struggles that that are actually happening to us real time right now. Because of that, we're doing the best we can to pivot, take the punches, and keep moving forwards. But that's what the property is facing. And yes, we have funds in the account. We could probably pay distributions, but that would be irresponsible for us to do that right now. We need to build the nest egg back up. And if you communicate to people and just tell them that, then most of the time they care more about the longevity and like protecting their investor capital long term than getting a small distribution on a quarterly basis.
Yeah, I couldn't agree with you more. I mean, I'm a big believer that that transparency is going to help you and everybody else who's been transparent. I mean, I think this is going to be one of the key questions when people are vetting sponsors in the future. They're going to be like, hey, how did they navigate this tough time when interest rates were through the roof? Did they bury their heads in the sand and not talk to investors? And when they're talking to people, that's going to be such a huge thing. So look, a lot of deals aren't going great, but over communication is paramount. And I think communication builds trust too. So that's cool. Are you doing mentorship as well now, or you have some kind of a program as well?
So I'm teaching for Tyler's for the Multifamily Mindset program.
Perfect.
Yeah, I jumped into a program called the Multifamily Mindset with Tyler Devereaux, and I teach for them as well now, which is really neat.
Is it social media? Is it what's the best way for people to get a hold of you?
Yeah, social media for sure. I'm on there all the time. I monitor my social media more than I do my email. And so sometimes it's quicker for me to like jump on a DM and just shoot you a quick response or like a voice message. I love doing voice messages through social media too. And also too, that way it's me. I'm actually responding on there. But I love jumping on there. Email's good, but I like social media the most. But you can follow us on our website, join our investor database, and just follow along with our journey. See what we're doing, see what projects we're putting out there, and yeah, what kind of content. Yeah.
Eric, you're not supposed to be checking email. You know that.
Well, we're still working on it. My assistant, we're still working on my assistant, but she's getting better at it each day.
That's awesome. Yeah. So Eric and I are both part of Dan Martell's coaching group. And that's one of the things that we've all been working on, is transitioning to an executive assistant and not be in charge of or accountable for our email. So everybody, hey, look, congratulations. You've been, I've been really impressed with your what you're doing in social and just blowing it all up. And this is just the beginning. I can't wait for you to get to your massive following. And more importantly, I really appreciate your time. I know you guys are super busy. Thanks for adding so much value to the real estate syndicated community. And then go follow him on Instagram. I think Instagram is probably his big one. Go follow him. What's your IG? What's your handle? Yeah,
my handle is at Eric, ERIC _Chadderdon, CHADDERDON. Go reach out, guys. I love connecting with new people and just adding whatever value I can at any place I can. I'm an open book, tell you the good, bad, and ugly. And I just love making good connections with good people. So appreciate your guys' time.
Awesome, man. Appreciate you guys. And I appreciate everybody attending always. We had a really good turnout today, Eric. And we'll see everyone next week, same time, same channel. Thanks, everyone.
Thanks, guys. Bye.
If you'd like to join us live on these episodes and have a chance to get your specific question answered, you can simply go to realestatesyndicatorlive.com and register to be live on the show. Hope to see you then.